Hey, what's going on, guys? It's Ricky with TechFund Solutions. So a quick little update. Netflix is set to report earnings today after the market closes, and just wanted to quickly talk about the overall earnings per share and revenue expectations. As of right now, Netflix is trading at $690 per share, a nice little retracement from its highs of $736. Currently, a little bit more on the oversold side based off of the RSI indicator, so it is a little bit more on the cheaper side, but like we've said before, the cheaper can always get cheaper. And remember, big tech is finally going to start reporting earnings next week. Netflix is kind of the start. So Netflix this week, we have Tesla reporting next week, and then the rest of big tech will follow. It's going to be a super exciting time. So if there's ever been a stock that's tech related that you wanted to pay attention to, make sure you do your due diligence and look up when it's set to report earnings. Because again, right now it's trading at $690, but one thing that I'm really beginning to catch is that a lot of these companies are lowering their guidance. So they might come in when it comes down to actual earning reports better than what was expected or at what Wall Street expected. But one thing I'm going to be paying attention to, and it might just be me, is what are they doing with the labor market? The labor market is a big focus for the Federal Reserve, but we also just got news today that Meta is reporting layoffs. So is it because they expect to slow down, that they don't want it to cut into overall net profits, that they're laying off their workforce? So again, it's going to be very exciting as the rest of big tech begin to report earnings to see if they lower guidance or set expectation to actually reduce employment due to maybe lower revenue for up and coming quarters. Something that I'm really looking forward to learning more about to see if that selling pressure continues. If you guys did not know, Nvidia today hit all-time highs, $140.89 per share. If we click on the day chart, it is new all-time highs, and it did it for absolutely no reason, just to support the case that yes, Nvidia is a very strong company and one of the most bullish companies for all of 2024, but hype is so real right now. Please do yourself a favor and know when to take profits. If you're a long-term investor and you've been invested in Nvidia for a long time, I'm not really talking about you. If you don't want to take profits, that's on you. I'm talking about those that are thinking of buying at all-time highs. Know when you've missed the trend. And even if it does go up a little bit more, the downside potential is absolutely insane. Nvidia is not a good deal. And again, that is just my 2 cents. You guys let me know down in the comment section. I think it would be a terrible mistake if now is the time you are choosing to want to buy Nvidia. The reason I say that is one thing that always happens is Nvidia does pull on back. And even then, it would make more sense to be able to load up when the deal presents itself. Even if markets, again, are a little bit on the overbought side, they always correct themselves. And that's when I think it makes the most sense to, buy whatever company it is that you want to be invested in. Just make sure you do it in a calculated way, and that again, you're not doing it based off of the fear of missing out. So Nvidia is a stock that I'm shorting today. I announced it to my LPP team. I shorted it from its highs and on that retracement, and I'm waiting for the break below the moving average, that if we do get it, I think I can walk away with a few $1,000s in the green. But obviously, I'm going to be shorting Nvidia with a few $100,000. So please do not compare my profits to yours if you're just trading with a much smaller dollar amount. I say that so you know that the few thousand I make isn't just off of trading with 5 or 10K. I trade with a few 100,000. So please make sure that you're aware of that. Other than that, just wanted to talk about the expectation for Netflix. Lower highs, lower lows, a lot of selling pressure is going on right now, and I'm very excited to see on how it actually comes when it comes down to being reported, to see if it beats expectation and where the guidance is at. Because remember, there's 2 parts to every earnings. What it reported for earnings, which is based off of previous quarter, and its guidance of what it's expecting for up and coming quarters, which in my opinion is the most important. And this is going to be very exciting as we set the tone for the rest of big tech. With Netflix being at a $295 billion market cap, it's big, but it's definitely not like the rest of big tech that sit at the cusp of $1 trillion and or actually trading at $1 trillion of a market cap. So again, expectation for Netflix, $5.09 per share is the EPS. Revenue, $9.77 billion. So we'll see if it actually exceeds expectation, and that is set to happen after the market closes. So you guys let me know down below if there's one stock that's going to be reporting earnings that you're paying attention to, that you plan to buy the dip on. Let me know down in the comment section. I would love to check it out and see why you see value in it to see if it's something that I would personally want to invest in myself. Hope that earned a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care, team.